Hey, my name's James Nicholson and welcome to my channel. Let's look at this week's best mortgage rates. This is a new weekly series. We're going to look at the best rates in the market for HMOs, for buy-to-lets in a personal name, buy-to-lets in a company name. That's the way you should be doing it on new purchases. And we're also going to look at the best residential mortgages as well for the week. Now, there's some changes this week. First slide, you can see already, there's not much change there, but the rest is different. So there's some new lenders out there. The deals are moving around a little bit. They're not going up particularly high. They're not dropping particularly high. It's a fairly stable week this week. So it's interesting to see, but there are new lenders that are the cheapest, which is very interesting. So before we jump into this, as always, if you haven't done already, do subscribe to the channel. It's going to be down there. Down that side. Do subscribe to the channel and hit the bell notification. That really helps us with the YouTube algorithm. Share this video with some friends. I'm sure you know some people that are looking for a new rate at the moment. This might help them. Comment below with any questions or opinions. And if you know any lenders that we should be looking at that we've maybe missed, do let me know and we'll make sure we consider those next week. So the first one that I wanted to look at is for HMOs. Now, this isn't a massive market, but it is a very good strategy. It's a high cash flow strategy, and a lot of people are making very good money by providing a service that people just want. So there's interesting articles in the news today that talk about the UK. We had a target of making 300,000 houses per year, but actually, with the population growth that we're having, and we're going to have in the next 5 years, we actually need to build 550,000 properties. So HMOs actually provide more accommodation because you're taking a one bedroom, or let's just say a 3-bedroom house. Those rooms might not all be used, and you're going to turn it into 5 bedrooms that are let on an individual basis. That's going to get 5 people off the market looking for property. So fleet mortgages seem to be the best deal in the market still at the moment. They've got a 5-year deal at 5.93. There's no fees on that, which is decent. 2-year deal is 5.29. So these aren't bad rates at all. Both of them will lend on a 75% loan to value. So that's fleet. I forgot at the beginning to mention, like the video, guys, because that really helps us with the YouTube algorithm. So do make sure you like the video. Quickly have a little pause and do that now. So next lender is for limited companies. This is new, and this is a new lender this week. They're not a new lender, they're a big lender. In fact, I've got quite a few properties with these guys already. I'm actually looking to buy a new property with them, put an application through this week. So the Mortgage Works, they are part of Nationwide. They are a big lender. They've always had very, very competitive rates. And that's really good because that's what we need. We need to be fighting over deals. Now, there's some things to consider in these deals that I want to highlight as we go through this. So the 5-year deal is 5.14%, which isn't bad. The fees are 3%, loan to value 75%. 2 years, 4.99, so just under that 5%. Limited companies tend to have more expensive rates. I don't know why. I don't think it's right or fair. I think it's just not enough competition in the market. And they also know that if you run a property through a limited company, it's more tax efficient. So you'll be making more money, so they can charge you a little bit more. Now, on both of these deals, what you've got to look at is the fees. The fees are pretty high on this. 3%. Now, that is happening in some of the buy-to-let deals. They're way less friendly than the residential property deals because it's an unregulated lending. It's not like a residential mortgage where the financial ombudsman and all that stuff looks over this stuff. This is unregulated lending, buy-to-lets. And so they can charge pretty much what they want, and it's only competition that drives that down. Now, with buy-to-let, what you've got to understand is whether they'll lend on you is determined on the return that you're going to get. Are you going to make enough money? And that's based off the rate. So rather than giving you a 6% rate as they could here and a lower fee, they drop the rate, but they hike the fee because then you can pass the affordability. It's one way that they sneak around little loopholes there. So that's interesting to see. They're not bad, these rates. I've had worse. And so, yeah, Mortgage Works is one to definitely have a look at today. For a buy-to-let in a personal name. See, buy-to-let in a personal name, you get a better rate for sure. Barclays have now become the cheapest in the market. They've moved their rates around because they want to win the business. And this is what you'll see as we do this on a weekly basis. You'll see lenders change spots because maybe one lender wants to be the cheapest for a few weeks, get an influx of inquiries, build that portfolio out, lend that money, and then they're happy for someone else to take their spot while they're working on those deals, and they might come back and do that again the following month. So Barclays have got a 5-year deal at 4.23, which is pretty good. Not as good as the just below 4% deals that we had previously, but it's not too bad. Fees are different on this. This is in personal name, £999. That's a big difference compared to the Mortgage Works deal there. If you borrowed 300 grand off the Mortgage Works, you're going to pay 9 grand in fees. Here, you're only paying 999. Same 75% loan to value. On their 2-year deal is 4.4, which is decent. You need to go and get your own financial advice. Speak to a broker. I'd probably take the 2-year deal personally, because I believe rates are going to drop at the back end of this year and next year. And so I'd feel that when I remortgage, I'll probably get a better rate. That's my thought behind that. The fees on this are $899, so really, really affordable again, so not too bad there. Next one is the residential mortgage, and again, that's with Barclays again. Now, Barclays have a deal here. It's a 5-year deal, and it's at 4.23. Fees $999, so pretty much the same as on the buy-to-let side of things here. So not bad. Like these deals out there, they're way better. Because I know some of you are going to look at the comments and you're going to go, look, these are terrible rates. Rates are going to drop, but you've got to understand we had historically low rates for such a long time. These are just more normal rates, and these rates are significantly better than rates were 1 year ago when it was very hard to get anything below 6%. So I think we're moving in the right direction. We've kind of got like a flat market in the mortgage this week. They haven't really had much movement up or down. I don't think you're going to get much movement down till the Bank of England starts moving things and you start seeing some better inflation data in the next few weeks and months. So that's it this week. Let me know your thoughts. Let me know, did I miss a lender that I should have included? Do comment below. Do check out all the other content on the channel. Remember, get enrolled in the fundamentals of property investing. Hundreds of you have done that now. I'd love to see you on the inside on that. It's less than 50 quid. I'm going to link that in the description. Do check out all the other content on my channel, including, where is it going to be? This video right here.